Okay, so did you hear about L&T Technology Services' latest earnings report? I mean, the numbers seem pretty interesting.
Yeah, actually, I did take a look. It's quite a lot to unpack, right? But yeah, seems like they've been making some moves, so it's definitely worth a deep dive.
Uh, Absolutely. So, first off, from what I gather, they're into a bunch of stuff, right? Like they have a hand in engineering and tech solutions and even some digital stuff. Can you elaborate on that a bit?
Right. So think of it this way. They're not just building things, they're basically providing the brains behind the scenes, especially in industries like automotive, industrial products, and then all the way to high tech and medical. It's like they're the tech backbone.
That makes sense, I guess. They are the unsung heroes of the tech world. So, what about the actual numbers? I mean, revenue, profit, all that jazz.
Well, the consolidated revenue, according to the report, shows they've raked in about 26,530 million rupees this quarter. And compared to the last quarter, it's actually a decent jump. We are talking about a noticeable increase. I mean, not huge, but significant, right?
Right. Okay. And what about net profit? Is the company really profitable? I mean, making money?
Oh, yeah, definitely. The net profit, according to the statement, stands at around 3,195 million rupees, which actually is pretty solid, I think. So they are making a profit for sure.
Okay, that's good. That's good. And what's this I see about earnings per share? Like, how much does each share bring in?
Okay, so earnings per share or EPS is basically how much profit is allocated to each share of stock. The basic EPS is around 30.47 rupees. It's, well, more or less in line with the previous quarter. So pretty stable, actually.
Okay, that's good to know. And did the report mention anything about their expenses? I mean, all that profit has to come from somewhere, right?
Right. So their employee benefit expenses are their biggest cost, about 13,951 million rupees as they operate a service-based industry. Other expenses are also a considerable chunk, like around 7,632 million rupees. It's a lot. I guess that's the cost of doing business.
Okay, so costs are high, but still making a decent profit. That's pretty good. And I also saw something about segment-wise revenue. What's that about?
Well, so that's about how their different business sectors are performing. So they've got mobility, sustainability, and tech, each contributing differently to the overall revenue. It helps to get granular on the business performance.
Ah, I see. So, they are not just a single entity, but a mix of business verticals, each having a different performance. So, how's each of those segments doing? Like, which one is the star performer?
So, from what I've seen, the tech segment brings in about 9,692 million rupees, followed closely by mobility and sustainability with 8,578 million rupees and 8,260 million rupees, respectively. So, they all bring in good numbers.
Gotcha. So, tech is a winner, at least this quarter. And I guess there were also some changes in the segment composition, right?
Oh, yeah, actually, they did reorganize their operating segments, it seems. So instead of 5 segments, they've now streamlined into 3. That was like effective from April 1st, 2024, I guess.
Interesting. I wonder why that happened. I mean, that's a big shift.
Well, it says they've streamlined the organizational structure for better clarity and synergy, I guess. So mobility now includes automotives, commercial vehicles, and aerospace. The idea is to bring similar things under one umbrella.
Makes sense. And sustainability and tech, what's under them?
So, sustainability is basically industrial machinery, electric and power, FMCG, and oil and gas. Tech, on the other hand, includes medtech, semiconductors, and consumer electronics. That is a big portfolio if you think about it.
Oh, they really are into everything, aren't they? So, what about other income and finance costs? I mean, those other small get significant numbers.
Well, so other income is about 335 million rupees for the quarter, and their finance costs, like interest on loans, are at 155 million rupees. These are minor compared to operational revenue, but important nonetheless.
True. And the report mentioned something about acquisitions. What's the story there?
Oh, yeah. So it seems like they just acquired IntelliSwift software through their subsidiary L&T Technology Services LLC for a total cost of up to $110 million. That's a big ticket acquisition for them.
That's huge. So, what do they expect to gain from it?
Well, it says that the acquisition will strengthen their offerings in areas like software product development, platform engineering, data and AI, So it looks like they're doubling down on digital stuff, I suppose.
Seems like a strategic move, right? I mean, with AI being all the rage these days. And what about debt? Is there anything to worry about there?
From what I see in the report, the format for disclosing any outstanding defaults is completely blank. So it looks like there are no major concerns with their debt situation, no red flags there, it seems.
That's a good thing, right? So overall, how would you summarize their performance this quarter?
Well, I mean, despite higher expenses, they have managed to maintain good profits and are strategically expanding their capabilities with the IntelliSwift acquisition. They seem to be on the right track, I would say.
Okay, that is pretty insightful. I mean, they're not just sitting pretty, but actively trying to get better, right?
Absolutely. And the fact that their revenue has increased compared to the previous quarter indicates growth and better market conditions, I guess. All very positive signs.
True that. So, what's the outlook for LTTS from here? I mean, any predictions or anything like that?
I'd say, well, with the IntelliSwift acquisition and their focus on digital integration, the future does look promising. They are in a good position to leverage the increasing demand for technology services. So I expect them to grow in the coming months, I guess.
That sounds like something worth keeping an eye on. So, anything else that stands out from the report?
Well, the fact that the auditors have issued an unqualified limited review report, that means they didn't find any major discrepancies. So it's another green flag. All positive, actually.
Okay, so no major red flags, solid growth, and strategic moves. That's a pretty good picture, actually. But things can change pretty quickly in this market, right?
Absolutely. It's like trying to predict the weather. But based on the current data, LTTS seems to be doing well, I guess. We'll have to see how it pans out in the coming quarters.
Well said. Well, this has been a really informative discussion. Thanks for breaking it all down for me.
No worries. Always happy to chat about numbers and tech stuff. Now, let's see how they perform in the next quarter, right?
Definitely. So let's end it there and keep an eye on the future.
Sounds good. Let's keep an eye out for their next earnings report then.